why I invested into Western Union company. So I don't know if you are aware, but this company is not in the S&P 500 list, and usually you will not find a lot of materials about why people invest into this company. In brief, it is now traded at a price of $14, I think plus minus 14.1, and this company offers up to 7% dividend yield, which I really prefer as a dividend investor. This is something that I look at the same time, hoping that the company will be having low volatility, high dividend income yield. Why Western Union, right? This is the money transfer system that has two unique propositions. One of them is, of course, exchange rates, that unlike any other company, for example, like Binance, they offer money transfers and exchange rates applied at the same time, so that anyone who basically need to send money from one country to another can do the transfer and have the preferred exchange rate at a really interesting rate, sometimes at 0% fees, sometimes with some minimal fees. But what is really important about it is that it has offices. So if you'll explore their website, they're basically one of the well-known brands in the industry. They exist like for a lot of years on the market, and they have specifically branded locations or partners where you can go and basically get your money physically, which a lot of companies do not have. So if you use any exchange rates of the cloud companies, you cannot still withdraw your money. So you go to some institution where you can actually receive your money, and that institution usually charges you. So this is why I really like Western Union, because they can apply all of the exchange rates and basically anchor you to using their service, and at the same time get the money in person and receive cash, which not many companies can offer, especially under a well-established brand. And if we look at one of their other directions that actually make them a lot of money is the business solutions vertical. So if you look at the use cases, so it's receiving funds, managing them, sending and receiving mass payments. And if you look at the industries they're covering, it's really wide range of them, from education, financial services, pensions, travel, healthcare, legal. So this has an automation. So this is why we can conclude that the company can expand to a lot of markets. It can cover a lot of areas, a lot of businesses. It's not stick to some specific business or specific vertical that this company will be limited with. So in terms of growth, they have really interesting perspective. As a long-term investor, we all look for it, first of all, that the company has a lot of perspective, and that company is doing some really good stuff in general, that they're earning money legally, they provide unique propositions and have some USPs. And if we look at the financials of the company, you might see that the company hasn't had much of a growth. You can see that they had a dip in 2012, then they recovered, but then again dropped, and then recovered, and then again dropped, and then had a massive spike in 2020, then again dropped, then again spike. And now we're at the price of $14, which makes me think that this is the right time to buy a stock. Again, this is not a recommendation. You can do what you consider relevant. And one of the parameters that actually highlighting this is PE ratio. So you can see it's 6.6 currently. And if we look at the price to free cash flow, we can also see that they have a lot of cash on hands. And again, as any healthy business, we're entering recession. So if your business is having a lot of cash on hands, this is exactly something that Fidelity is always loving when they select the stocks. They are looking for a lot of free cash flow, because this is the benefit of company with really good business, that you don't struggle with debt or with a lot of troubles, and you always don't have money, but you have perspective. So in this case, they have a lot of money and they have a lot of perspective. They are paying really high dividends, up to 7%. Other than that, you can see that the sales are at $4.7 billion, which is basically highlighting that this is a large business. And it's not an S&P 500, which I actually like, because it means that less funds will be going here and there, investing and withholding the funds or making the company overpriced. So you can find in this area of small to mid-sized companies a lot of interesting choices that not many people know of, and they have an income close to $1 billion. Maybe this is why they're and profit margin of 17%, which I think is really high to my view. I think that everything close to 20% is a really healthy margin, especially considering that the company is not doing any dumb things. So this is why I'm not sure why it's reflecting this large of a drop. But again, I think that the price is very interesting. In the future, they are expecting worse performance. But again, to my knowledge, this is the right time to buy the company now. And let's analyze the quantity of outstanding shares. And you can see that the company was constantly decreasing the quantity of shares on the market. So this is why, I mean, I don't understand this trend since 2021 till now, because you can clearly see that the company has actually been decreasing the shares, and it's a very stable decline, I would say, in the quantity of shares, which I, as an investor, really like. If we look at debt to equity ratio, you can see that debt actually spiked in 2021, which could be one of the reasons for the decrease in interest of investors. But again, they are decreasing the quantity of shares, which is a really good sign to us as an investors. And long-term debt also decreased a bit year over year while increasing the equity. The debt to equity ratio is really insane, like it's around 6 to 7. But at the same time, as we know, the company has a lot of free cash on hands. Maybe they're planning to invest it. Again, read the investor relations materials before you make the choice. If we look at the debt to equity ratio by cohorts of companies, we can also see that the company is very risky in terms of this parameter. But again, considering free cash flow, I'm more confident that I'm making the right choice. And if we look at the analyst ratings, we can see that the company was outperforming the estimations, which is again strange considering that nobody believes in the company, but for a large period of time, the company is performing really better than it's estimated to perform. And most of the analysts are basically skewing towards like holding the stock or selling the stock. But to my view, that was the right estimation at the price of $25, because again, there is not much of opportunities that I saw at that point in the company. But looking at the current PE ratio, I'm not actually fully clear on why analysts are not believing into this company. In terms of the current price of $14, we are expecting the drop to happen. But again, recession, the transfers are maybe going to decrease. But a lot of companies like crypto companies and those exchanges will also suffer. So we don't know if the whole industry will thrive or not, or in which form it will survive. So my hunch is basically to buy the company, to hold it, get the dividend income, specifically considering the PE ratio. And the last point, which basically convinced me that I am doing the right decision, is looking at top 10 owners of Western Union company. And you can see that BlackRock is investing in it. The Vanguard Group is increasing. There are two companies that are decreasing their positions, like Capital Research Management and Fidelity. But overall, we can see that other companies like Charles Schwab are increasing. So this is why I think that there is a strong belief that this company has a bright future, and there are some thoughts on like what decision to make. But overall, the company looks very interesting now. And if we look at top 10 mutual funds, you can see that iShares, again, Vanguard and Fidelity do have some stake in this company, which makes me think that they still see the future, as you can see in low price stock funds and small cap index funds. So my take on this is that it is one of the companies to try out. And so my hunch on this company is to buy it. The company price went up a little bit. The dividends are stable, and the company, to my view, will not perform worse all of a sudden. That there will be a slow decline, because the companies of this size, they don't usually have very high volatility, and considering low price of the stock, you can be very reactive to any changes that happen to the stock. So that's my hunch. I will plan to increase my take in the company as long as the price keeps being low and stable.